3 years ago, in November 2021, I set a very lofty goal to try and achieve $1 million by the age of 35. And when I talk about $1 million, it's in my investment portfolio. So during these 3 years, especially in 2022, we have witnessed some very important events like the 2022 stock market crash. We also had the war and supply chain disruptions with the Ukraine and Russia war. And that has really hindered some of this progress, especially when we look at the stock market correction. In fact, last year in June 2023, I did an update on why I failed my financial independence retire early goal. And if you remember back then, my progress was only 45%. So that was $450,000 in June 2023. And so far, 1.5 years have passed, and let's see how much have I progressed since then. Also, if you want to join like-minded people trying to build their wealth to financial independence and achieving financial freedom, then join us at Honey Money SG Telegram with over 17,000 members, close to 18,000 members now. So for those of you who are new to the channel, let's talk about this goal, right? Why $1 million and why age 35? And if you are chasing fire, you have heard of this 4% withdrawal rate, which is the safe withdrawal rule. So 4% of $1 million, that's $40,000 per year, which is comfortable for myself and enough for my semi-retirement life doing YouTube videos occasionally. So what will this $1 million portfolio consist of? It will mainly be cash, stocks, bonds, and I will also want to include my CPF OA investments as well as SRS investments. It does not include my own stay property, which is a 4-room HDB BTO flat, as well as does not include my CPF SA or MediSave account balances. And the reason why I include my CPF OA and SRS investments is because for these two portfolios, I do invest them in equity funds, namely in the endowers portfolio. So these are highly subjected to market forces. But what are not subjected to market forces? That will be your special account and MediSave account balances, which I did not include. Because if I were to be less conservative, I would just include my special account and MediSave account balances, which is close to $300,000 already. And that would have already made me close to the $1 million goal. The other thing is that I also excluded my own stay property because I felt that own stay property, you cannot count it as an asset because you have to use it. And even if you sell it away, you have to buy another flat or property. So I don't count it. Maybe sometime down later, if I manage to get another property, then yes, I'll count investment property as one of the portfolios. But I fully understand that everyone's net worth calculation and also their retirement portfolio calculation is very different. Some of you may choose to include your CPF balances or even include your own state property, and that is okay because we all run our own path. So depending on which path you have chosen, stick to it. This was the path that I stick to it since 2021 when I set that goal. And I must still admit, it's a very lofty goal that is very difficult to achieve. And yes, I understand that to some of you, $1 million may be very hard to achieve. But to some other of you, you may think that $1 million is not enough, but I can honestly say that $1 million is just the first step. At least take your prudent steps to achieve the first million, then you can talk about the next 5 million or the next 10 million. Also for background context, if you are preparing for items like wedding, housing, renovation, yes, I do acknowledge that these events will wipe out a lot of your savings, but I'm glad to say that I already passed through these 3 stages and I'm still on track on the goal. And yes, I also understand that if you are doing CPF top-ups, that will also hinder your way of achieving financial independence, but I did it historically, and still I have not regretted that decision because that was based on my best ability or knowledge at that point in time. So moving on to the update, what is my current status right now? In terms of percentage, I would say that I'm around 75% completed now. And this is accurate as of November 2024, which means that $750,000, which is very close to $1 million in SGD. Okay, yes, ready to answer your question because last year, June 2023, 45%. Now November 2024, 1.5 years later, you're telling me 75%, and that means 30% gain in 1.5 years, which equates to $300,000. And yes, I do acknowledge that most of those gains come from capital gains, especially from the recovery of my stock portfolio or maybe ETF portfolio. Now, if you remember, 2023 was quite a bullish year, especially the late half of the year. And even till 2024, majority of the parts of 2024 were bullish, and so that led to a recovery of my stock market and investments portfolio. And if you remember, in November 2021, the all-time high markets back then during Euphoria, S&P 500 was at 4,700 points, And yes, it came tumbling after that, I think close to 3,500 points at the low state. Now it's as high as more than 5,700 points for S&P 500, So you see, holding long term, don't go in now, is really the best strategy. And this is why I also mentioned that, yes, many of you are afraid of market crashes, but you really need to hold true as long as you believe in your investments, especially in broad-based diversified index funds. And you cannot always put your cash into like all those low-risk assets, giving like passive income kind of thing. I already shifted out most of those funds to my investment portfolio. And that was the big change for this year, which I already updated. And if you also want to start investing, but you're scared of losing money, maybe you can try some paper trading lah. And do you know that you can even win attractive prizes when you participate in a paper trading competition? This year, to celebrate its 12th anniversary, Moomoo is having a strategic partnership with Nasdaq for a global paper trading challenge starting from 14 October to 16 November. And here is why you shouldn't miss it. During the 5-week challenge, you will trade US stocks and ETFs in a simulated environment using real-time data powered by Nasdaq Total View with $1 million in virtual funds provided by Moomoo. Learn and grow by testing your strategies using advanced tools and take zero risks. Practice without using real money. What's the reward then? Weekly positive return on paper trading could earn you a share of $20,000 in stock cash coupons with a total of $100,000 available over 5 weeks. For regional winners, the top champion can win $1,000 in stock cash coupons. For global winners, the top champion can win $10,000 and be featured on the Nasdaq Tower video in Times Square. Plus, if you register through my link, you'll receive an extra month of Nasdaq Total View market data worth $25.99 valid for 62 days. Sign up now by visiting the link below, register for the challenge, and get $100,000 in virtual funds to start trading. So are you ready to prove your trading skills? Get a head start. Learn, trade, and win with Moomoo. If you're new to Moomoo, sign up for an account using my exclusive link below to get the attractive welcome rewards worth up to 1,034 Singapore dollars and enjoy 6.8% per annum guaranteed return on first 30 days for fresh funds in Moomoo Cash Plus. Please note that Moomoo Cash Plus is an investment product. Principal is not guaranteed and up to 30 days of 6.8% per annum is guaranteed only during the promotional period. After the promotional period, interest is not guaranteed. This is not comparable and is different from fixed deposit or savings deposit. Coming back, I really need to emphasize on this goal is not really a FIRE goal. I made it very clear that it's an Ikigai goal. FIRE, financial independence, retire early, has been kind of overused and kind of bantered over different topics by various content creators. But what I'm chasing, I have to repeat for many times, is Ikigai, right? The way of living, doing what you love, doing what the world needs, doing what you're good at, and doing what makes you money. That is really the reason of life, and you can be in a job and working, and that is your Ikigai, and that is totally fine because you really enjoy what you're doing, and that makes good money and not so stressful for you. I think most people who are chasing FIRE, their starting stage maybe they really hate their job, so they want to find an avenue to escape. That's why they want to build out the funds and retire and not work at the same job. But maybe if you found Ikigai and you found Ikigai in the next job that you do, you maybe don't even need to retire, right? You love doing this, you can do this for the rest of your life. So I must still say that even though at 75% is a very good progress from the last update, I am still not sure if I can hit it by 35, $1 million is still a very lofty goal. I would say if based on current conditions and no like black swan events, it may be able to hit by the end of year 2026 when I become 35. And even if I don't hit it at 35, hitting it at 36 or 37 is still a very commendable goal, right? I think the more important lesson to learn from here is that you really need to hold your investments long term as long as you believe in it. There are many people who really give up halfway. They go in and out, they trade stocks, they look for the next shiny object, promising like the best return and telling you that index funds is for losers, this kind of content. But really, there are many roads that leads to Rome, right? Just find one that you're most comfortable in earning money. And that, for me, I believe is long-term investing in passive, diversified index funds and focusing on my business on content creation. Also, remember to diversify and don't all in on one stock or even one form of asset. Like my portfolio is very heavy on stocks. I'm also looking to diversify into other kinds of assets when the opportunity arises. And that will come in the next few updates over the years as my portfolio grow bigger and I really need to move away from a heavy stock portfolio. I recognize that it is not a very good thing to be heavily focused onto one sector of asset. So to wrap up this video, right, I know that many of you are in your FIRE journey, especially a lot of people who have put up their own content, their updates on their FIRE journey, reaching the first 1 million. I guess the main message from me is to really stay committed. If you have already announced the goal, that is great because now you're accountable for your goal. If I don't reach $1 million by 35, then that is very sad, right? Everyone will laugh at me, but I think that is okay because not every goal can be achieved by a certain specific time frame. As long as it is within your own expectations, right? I think you are really good already. You are better than people who are not taking action and just thinking about it and then, be a keyboard warrior commenting on other people, laughing at their goal. And when I look at other content creators, the newer ones talking about their journey, trying to achieve their own version of financial independence, I feel very encouraged, Like this new generation, wow, they are really very hardworking, So by publishing your journey online, you're also subjected to scrutiny from the internet because the internet is a very dangerous place. And I fully know that once I publish this video, there will be a lot of negative comments coming already. Or who knows, some media outlet or some online forums will take my content out of context and, I know what's going to happen. If you want the moral of the story, how to really keep on track to achieve $1 million by 35, I believe it's not always sticking to your day job, although that may be a very comfortable zone. On the passive side, try to stay invested in broad-based index funds like the S&P 500 or MSCI World Index or even the IWDA, Developed Markets Index. Broad-based is really to diversify your risk. Okay, and that's for defensive investing strategy. I know not everyone may agree with me, but here comes the active income part. Okay, if you're just staying in the same job for many years, it's not going to make you grow. Because if I stay in my old corporate job, I will still be earning like 5K, 6K at the age of early 30s. But if you manage to change to a higher paying career or skill level, or even better, you set up your own business, right? You become self-employed, then you slowly transition to a business owner. Then I think that's where opportunities will rise. Okay, I know a lot of content creators are really dissing on people who invest in index fund like this, the slow way. But really, the slow way is for you to passive grow your wealth. And the most important thing is still your active income, whether it's coming from your business income, your self-employed income, or your day job. Try to focus on that as an offensive part. Then the defensive part is the investing. Don't try to switch it, making investing like your offensive part, because I've been there trying many shiny things and they don't work out in the long run. At least that was for me lah. I know some of you very good in investing and trading one. So if you make money, good for you. But majority of the people don't make it. So yes, this is my current $1 million by 35 update, 75% completed. The next 25% we'll see in the next 2 years whether I can achieve it. And if you feel that $1 million is too far away, your first 100,000, how can you achieve it? Then I already done out a previous video on my $100,000 update.